Florida built a housing dream on concrete, coastline, and the promise of a simple lock-and-leave life. The numbers now tell a different story, and they speak in months, percentages, and hard cash. Start with October, the most complete snapshot of the market this year. Across Florida, closed sales of single-family homes totaled 21,191 that month, up 13.8% from a year earlier. Condo and townhouse closings also rose, reaching 7,223, up 11.1% year over year. Sales volume is not the problem. Price direction is. The statewide median for single-family homes in October was $411,105, down 0.9% from October of 2024. The statewide median for condo-townhouse units sat at $300,000, down 4.8% year over year. And another measure puts the drop in Florida condo prices over the last 12 months at 9.9%, the largest annual decline since a 21.8% slump back in 2009. When multiple yardsticks point in the same direction, down the market is sending a message. Inventory is the second part of that message. Condos across the state are now a buyer's market by a textbook definition. Statewide, condo-townhouse properties sat at a 9.3-month supply in October. Months of supply indicates how long it would take to sell the homes on the market at the current sales pace. Around 6 months is generally considered balanced. 9+ months is not balanced. It's leverage, and it has shifted to the buyer. Single-family inventory, by contrast, clocked in at 5.1 months in October. That sits close to balance, and in some markets it will even feel competitive. You can see the split. The condo side is heavy, the single-family side is steadier. Zoom in, and the pressure points get sharper. In several parts of the state, year-over-year condo price drops have ranged from 12% to 18%. Punta Gorda, Cape Coral, Tampa, and parts of Sarasota are all on that list. Those are not quiet adjustments. Those are visible, felt resets that hit listings, comps, and negotiations in real time. For a state that holds roughly a fifth of all U.S. condos, stress in this segment is not a sideshow. It's the main stage for affordability, retirement plans, and investor math. Why the sudden weight on condos? The first force is cost. Many owners are facing sharply higher expenses, particularly homeowner association fees and insurance premiums. When monthly carrying costs jump, sellers multiply. More listings push inventory up. This inventory, above 9 months of supply, pushes prices down. The chain is simple. The backdrop is not. After the Champlain Towers South collapse in Surfside in 2027, safety requirements expanded. Older buildings now face steep renovation costs to meet those standards. A roof that might have waited suddenly can't. A structural fix that felt optional becomes mandatory. Assessments follow. Owners who had budgeted around $300,000 valuations or monthly fees that once felt manageable have to reconsider their plans. Some stay and pay. Many list. Bag. Inventory climbs. Inventory climbs. There's also a baseline quirk to watch in the data. Hurricanes Helene and Milton hit Florida in late September and early October of 2024. Storms pause closings, slow inspections, and delay listings. Year-over-year comparisons against that disrupted month can look stronger than the underlying trend. The spike in closed sales, 13.8% for single-family and 11.1% for condo-townhouse units, reflects real momentum, but part of it sits on an odd base. The October picture is still the best window we have into where the market stands now. Median prices eased, single-family is near balance at 5.1 months of supply, and condos are clearly on the heavy side at 9.3 months. What does a buyer's condo market look like on the ground? It looks like longer days on market, more price cuts, and sellers that negotiate around inspections, insurance binders, and reserve studies. The 9 months figure is the clue. It would take more than 3/4 of a year to sell the current condo-townhouse inventory at the present pace. The longer the runway, the more patience buyers gain, and the more they can ask for in credits or repairs tied to post-Surfside requirements. The 6 months line considered balance sits in every listing agent's head. Right now, condos are well past it. The geography of change tells its own story. Cape Coral is on the front edge of the 12 to 18% condo price declines. The city also just saw a 2,610 square foot retail building at 631 Cape Coral Parkway E sell for $600,000. That is a different asset class, but it shows liquidity is not gone. It's selective, and it is happening at pointed price levels. Punta Gorda, Tampa, and parts of Sarasota join Cape Coral with double-digit condo declines. These are coastal and near-coastal zones where insurance and association fees can swing the monthly calculus by hundreds of dollars. When costs rise, the first-time buyers, retirees, and investors who have historically used condos as their entry point step back or look elsewhere. Yet even as the condo market resets, builders are moving dirt in southwest Florida. In Estero, the Kingston community broke ground on November 13th. The lineup reads like a who's who of production and semi-custom talent. Lennar Homes, Neal Communities, Pulte Homes, Taylor Morrison, and Coulter Homes. That is not a small bet. It is a statement that single-family demand in Lee County and the pull of master-planned living is still alive. Three numbers frame that bet in a broader context. 21,191 single-family closings in October, a 13.8% year-over-year gain, and 5.1 months of statewide supply. Builders know those numbers. They build into them. Drive south to Naples, and the scale shifts from subdivision to waterfront. The Halcyon Residences and Marina has secured full entitlement for a 9-acre luxury community. Sales are scheduled to start in January of 2026. Construction is slated for 2027, with completion planned for late 2029. That is a 4-year development arc spanning 3 distinct market environments. The only way projects like Halcyon pencil is if developers have confidence in the depth of luxury demand through 2027 and beyond. In Naples, they're betting on it. The pipeline continues in Bonita Springs. Midtown at Bonita, a 68-acre mixed-use development, has broken ground. It sits a quarter-mile east of I-75 on Bonita Beach Road. The plan is to redefine how Southwest Florida lives, dines, shops, and connects. That means residential units wrapped in retail, restaurants, and green space. This isn't a condo tower. It's a hybrid, built for a region that keeps drawing new households, even as the broader condo segment struggles. Mixed-use builds in population and resilience, block by block. 68 acres gives plenty of room to do both. Back in Naples, a boutique statement piece has cleared its last design hurdle. Harbor House, an exclusive collection of 14 luxury residences on Gulf Shore Boulevard, North One approval from the City of Naples Design Review Board. 14 units sound small because it is small. It mirrors what luxury is doing in pockets of Collier County, going deep on design, location, and finish in compact footprints. You don't need to sell 200 units if each one sits at the top of its segment. These project timelines matter. 9 acres for Halcyon, 68 acres for Midtown, at Bonita, 14 residences at Harbor House, foundations poured in Estero as of November 13th. Mark the hours. Sales start January 2026 for Halcyon, shovels in 2027, keys in late 2029. Inventory hits in waves. For condos right now, the wave is already on the beach. 9.3 months of supply statewide in October. For single-family new construction, the next wave is still offshore. Buyers, sellers, and lenders read those currents differently. Step back to the state level and keep the numbers tight. Florida's condo median of $300,000 in October is clear. The year-over-year drop was 4.8%, while another measure pegged the 12-month decline at 9.9%. The reality is somewhere inside that range, and it's not a small move. Single-family held closer to flat, with a 0.9% dip to a $411,000 median. One segment easing gently, one sliding faster. Closed sales rose for both in October, up 13.8% for single-family and 11.1% for condo-townhouse units. Best raises inventory split the picture, 5.1 months for single-family, 9.3 months for condos. If you were to draw a line at 6 months as balance, the single-family market sits just below it. The condo market sits well above it. That's the setup. Now the why in hard edges. Insurance premiums in Florida have escalated for many coastal buildings. Associations have responded with higher monthly fees and, in some cases, special assessments to comply with stronger safety standards following Surfside in 2021. Expanded safety requirements mean concrete restoration, structural remediation, and reserve funding levels that are not negotiable. Owners who purchased a decade ago or even 5 years ago are now looking at new budgets. When carrying costs surge, the supply of listings grows. That's why condo inventory is above 9 months. And that's why prices have fallen between 4.8% and 9.9% on an annual basis. There is a note of policy relief on the table. Legislation was signed aimed at providing financial relief to condo owners. The goal is to ease immediate pressures without compromising safety. Will it lower monthly costs meaningfully for the average owner of a $300,000 unit? That remains an open question. Policy runs on timelines, budgets run on due dates. Between 9 months of supply and higher base costs, the condo market is likely to remain under pressure in the near term. That is not an opinion. It's what the structure of the market signals. Look again at the map of stress: Punta Gorda, Cape Coral, Tampa, parts of Sarasota. Declines between 12% and 18% year over year vary by submarket, building age, and proximity to the coast. It's not uniform. It's patchwork, which is how real estate resets. A waterfront mid-rise with newly replenished reserves plays differently than a 40-year-old building mid-renovation 3 miles inland. Both feed into the statewide 9.3 months of supply. Both are pulling median prices down. But the pace changes from zip code to zip code. This is where the broader economy taps the shoulder. The United States is carrying $37 trillion in national debt. More than $950 billion in commercial real estate loans mature in 2025, with peak maturities extending for 2 more years. Household growth slowed to 1.26 million annually in the first quarter of 25, down from a 1.93 million average between 2019 and 2022. Those are national numbers, and they shape Florida's runway. When capital anticipates refinancing waves and slower household formation, it gets choosy. When it gets choosy, assets with 9.3 months of supply need to price to sell. Liquidity favors the balanced segments first. The risk lens has sharpened. Investors no longer look only at property type and zip code. They model portfolio risk around insurance costs, extreme weather, regulatory compliance, financing exposure, and even air quality. Technology is part of the new toolkit. Predictive analytics, climate risk software, drone surveys, and smart building systems are being used to gauge resilience, not just return. That's not an abstract shift. It's a filter that will favor buildings with proactive maintenance and clear reserve plans. It's a filter that will route capital to projects like a 9-acre halcyon with full entitlements and a clear 2026 to 2029 schedule, or to a 68-acre midtown at Bonita that blends uses and displaces risk across tenants and timelines. Meanwhile, buyers are back at the table. Carefully, in October, the statewide count shows it: 20 to 1,191 single-family closings and 7,223 condo-townhouse closings. Prices eased, especially for condos. Inventory gave buyers room. For a first-time buyer in Tampa or Sarasota, a 12 to 18% price drop is not just a statistic, it's access. For a retiree eyeing a $300,000 condo median, it's feasibility. For an investor who lost bids 3 years ago, it's leverage. But there are strings attached: insurance, association fees, and upcoming capital projects. The monthly number matters as much as the purchase price. On the ground in Naples, the luxury cadence hasn't missed a beat. A 14-residence project on Gulf Shore Boulevard North moved through the city's design review board and now advances. The unit count is small by design, and the location is the value. In the same city, developers of a 9-acre waterfront community are ramping for January 2026 sales, with construction targeted for 2027 and completion in late 2029. These are long-duration plays. They assume that Naples' appeal sunlight, coastline, and a tax structure that draws wealth outlasts a statewide condo correction. If you walk through the downtown core, that belief shows up in hard numbers: square footage, acreage, and calendar years plotted out 3 to 4 steps ahead. A few miles north, Bonita Springs is chasing something different at scale. 68 acres at Midtown at Bonita, a quarter-mile east of I-75, is an attempt to bind residential demand with lifestyle and convenience. As a mixed-use destination, it is designed to draw not just buyers but tenants and businesses whose leases and spending create stability through a cycle. That kind of diversification is a risk strategy as much as a design choice. It recognizes that population growth has slowed nationally and that household formation softened to 1.26 million annually in early 2025. In a slower growth environment, real estate that can attract and retain workers wins. Location becomes more than an address, it becomes an ecosystem. Cape Coral offers its own signal. A 2,610 square foot retail building at 631 Cape Coral Parkway E changed hands for $600,000. Small, yes, but the number shows functioning capital at the neighborhood level. Even in submarkets where condo prices are seeing 12 to 18% declines, the right piece of property at the right price finds a buyer. Transactions haven't stopped. They've gotten more precise. For homeowners, the decision tree has more branches now. If you own a condo in a building with upcoming structural work, the choice is to hold and fund or price and exit. If you're a single-family owner sitting on 5.1 months of supply in your area and a 0.9% statewide median price dip, the equation is different. Some sellers will list into the relative strength of that segment, others will wait for spring, watch inventory patterns, and decide. Buyers are relearning something that felt forgotten a few years ago. Time can be an ally. With 9.3 months of condo supply, negotiation has a clock. With statewide condo medians at $300,000 and falls between 4.8 and 9.9%, anchoring offers to October numbers make sense. Developers are reading all of this and still moving forward. Estero's Kingston community broke ground with a builder roster of 5 Lenner Homes, Neal Communities, Pulte Homes, Taylor Morrison, and Coulter Homes. That matters because builder behavior is a real-time vote on demand. They scale up when they see traffic and contracts. They lock in dirt and permits when the spreads work. Groundbreaking on November 13 in Estero is a specific bet on Lee County's next 5 years. Naples' 9-acre Halcyon, with a path to late 2029 completion, is a different kind of bet on Collier County's next decade. Bonita Springs' 68 acres alongside I-75 looks like an attempt to create its own gravity. The capital markets surrounding all of this are not static. With more than $950 billion in commercial real estate loans maturing in 2025, lenders and borrowers are renegotiating risk right now. Banks are extending some loans to avoid taking back properties, while private debt operates with more opacity. That environment slows transaction volume and widens bid-ask spreads. Opportunistic buyers are waiting for discounts that haven't fully materialized, and sellers are anchoring to last year's valuations. In Florida condos, where the data show a 4.8 to 9.9% annual drop and 9.3 months of supply, the price discovery process is actually ahead of other segments. That's the harsh upside of a correction. Clarity arrives faster where inventory is highest. All of this frames a simple, if uncomfortable, truth. In Florida's condo market, the forces are structural, not just cyclical. Safety standards expanded in 2021. Insurance premiums and association fees have risen sharply in many buildings. Renovation mandates carry 6-figure price tags at the building level and 4 to 5-digit assessments per unit. Those realities don't turn on a dime. Legislation aimed at providing financial relief can cushion the impact, but it cannot erase the engineering. The structural becomes the financial becomes the price. The price is the market. There is nuance inside the averages. A condo tower in Tampa with modern systems and a fully funded reserve study will ride out the shift differently than a smaller building near Sarasota facing immediate concrete restoration. Punta Gorda may show a steeper percentage drop because it ran hotter during the upswing. Cape Coral's double-digit decline sits alongside active retail transactions, like the $600,000 sale on Cape Coral Parkway E, showing how mixed-use neighborhoods can keep humming. Florida is a mosaic. and the statewide medians, $412 billion, $105 for single-family, $300,000 for condo-townhouse, are just the tiles. So what comes next? Base case, the condo segment remains under pressure in the near term. Inventory near or above 9 months takes time to burn off, even with 7,223 October closings and an 11.1% year-over-year bump. Price stabilization usually follows sustained absorption, and the absorption rate is bound by insurance quotes, association budgets, and the cadence of required building work. Watch for signals in monthly inventory moves. Any shift from 9-3 months toward the 6-month balance line would mark a meaningful turn. On the single-family side, expect steadier footing. With 21,191 October closings, a 13.8% annual increase, and 5.1 months of supply, many markets will feel balanced, with modest negotiation room and a tighter spread between list and sale. 2 watch items deserve a place on your dashboard through the first half of 2026. First, capital and refinancing. More than $950 billion in commercial real estate loans maturing in 2025 will keep lenders conservative. Even though that number spans offices, retail, and multifamily, the knock-on effect is real. Higher scrutiny on new development financing, tighter terms for bridge loans, and more competition for equity across asset classes. If the fundraising market stays challenging, some planned projects may phase more slowly, while others, like the 9-acre Halcyon, with sales starting in January 2026, and the 68-acre Midtown at Bonita, already in the ground, will benefit from being ahead of the pack. Second, the human engine. Household growth slowed to 1.26 million annually in the first quarter of 2025, down from an average of 1.93 million from 2019 through 2022. In a slower growth environment, demand gets choosier. Projects that blend uses, like the Bonita 68 acres, and locations that deliver daily convenience, like a quarter mile from I-75, can outperform. Condos with 9+ months of supply have to compete on monthly costs and immediate livability. Florida's housing market is not collapsing. It is calibrating. The statewide numbers in October, 411,000, $105 for single-family medians, down 0.9%, $300,000 for condo-townhouse medians, down 4.8%, 5.1 months of single-family supply, 9.3 months on the condo side, 21,191 single-family closings, 7,223 condo-townhouse closings tell you where the fulcrum sits. The condo market is heavy. The single-family market is closer to balance. Builders in Estero are breaking ground. Developers in Naples and Bonita are pushing into 26, 27, and 2029 with acreage, permits, and timelines. In Punta Gorda, Cape Coral, Tampa, and parts of Sarasota, double-digit condo declines between 12% and 18% are reopening the door for buyers who couldn't get in 3 years ago. One last number matters because it marks a before and after. The 21.8% drop in 2009 was a collapse. The 9.9% 12-month decline today is a correction. Between those two sits a state that holds roughly a fifth of the nation's condos, a post-Surfside safety regime from 2021 that is non-negotiable, and a capital market staring at $950 billion in maturities in 2025. None of that is a guess. It's written in budgets, bylaws, and loan agreements. It's printed in October medians, months of supply, and the 631 on a Cape Coral address where $600,000 changed hands. If you're an owner, ground your plan in the numbers tied to your building. Reserves, assessments, insurance quotes, and the comps set by 9.3 months of supply. If you're a buyer, anchor your offers to October's medians. $300,000 for condos, $411,105 for single-family, and the range of annual declines between 4.8 and 9.9. If you're a builder, track absorption by segment. 27,190 single-family closings and 7,223 condo-townhouse closings are the top line. 5.1 and 9.3 months of supply are the bottom line. If you're an investor, widen your lens. Portfolio risk no longer stops at property lines. It runs through insurance, reserves, regulations, and the calendar that takes Halcyon from January 2020 6 sales to late 2029 completion. Florida's housing market doesn't need a narrative. It has a ledger. In October, the ledger showed sales up, prices easing, and inventory dividing the map between balance and buyer leverage. In Southwest Florida, the ledger also showed shovels in the ground, Estero's Kingston on November 13th, and entitlements turning into sales galleries and seatwork from Naples to Bonita Springs. The state's condo market is under pressure in the near term. The single-family market is steadier. Projects with 9 acres and 68 acres and 14 residences are pushing forward anyway, because location, planning, and timelines can outrun a quarter or two of data. Hold that clarity as you watch the next set of numbers roll in. The base case is a measured glide toward balance in single-family and continued adjustment in condos. The risks to watch are tight capital, tied to $950 billion in 25 maturities, and the pace of household growth, which slowed to 1.26 million annually in early 2025. The upside to watch is absorption. If condo months of supply move meaningfully down from 9.3 towards 6, price easing can slow. If builders translate October's 13.8% and 11.1% sales gains into steady early 2026 contracts, the pipeline in Estero, Naples, and Bonita can land smoothly. Numbers don't tell you everything, but in Florida today, they tell you enough to act so. If this helped you see the market more clearly, share it with someone making a housing decision now.